What's going on, traders? Now, I will start with something unflattering, and that's the fact that retail traders cannot know what's going to happen next in the market. Because the sad truth is that the market is moved by institutions, by the big dynamic players. These are your hedge funds, your institutions, your Goldman Sachs, your central banks, whatever these people are. They have deep enough pockets, and they are the ones who are moving the market. They are the ones who are putting their will onto the chart and is doing almost for the most part what they intend. So we cannot possibly know what's going to happen next. But what we can do is we can learn the strategy to basically follow their footprints. It's basically like following a wild game. You see the footprints in the forest. So we as a retail traders, if we study the chart diligently enough, we can find a way how to follow the intentions of these institutions. And as I came in today, what I saw this downtrend working lower. So I immediately put my trend lines around this downtrend so it is clearly visible. And I have a first break of this downtrend. Now, since I know that there's rules in price action that the trend lines will get retested. You just, after a break of a trend line, you don't want to go in immediately to enter a counter trend position. You want to wait for a break and a new low. In this particular instance, prices made a new high right here. We have a first entry long and a second entry long. Now, second entry long is a high probability setup, but we are not in an uptrend and we are not looking for reasons to go long. And on the other hand, this is a trap. This is a trap for traders who didn't learn how to follow the institutions correctly, who are just trying to guess that the market may reverse just because we have a close and a break of a trend line. So this is a nice trap because second entry long is a high probability setup in an uptrend. We are not in an uptrend. This is a trap. And the market made a big move down. Now, you guys can see that this is almost 90-degree move. This is a very steep move. And notice how far away we are from EMA. This is another hint that we can stack our odds on that prices will go back to the EMA. Prices cannot stay away from EMA for a long enough time. EMA keeps pulling prices closer to it as a magnet. And one more thing that it is helpful to us, if you measure this one initial lag and you put it to find when the target probably is, you're going to get exactly the measured lag. This is the first lag, pullback, this is the second lag. So the downtrend has played out from this moment. And prices are now working up higher, but still, we are still below EMA. So we don't want to go long yet because prices didn't prove us that they are reversing. We still don't know what the institutions want to do. So we are below EMA, but we don't want to go short either because we already have a break and a new low. So the best thing here is to sit on our hands, and prices made a sharp sell-off to a double bottom right here. In this instance, we made a double bottom right here, and the bottoming pattern started to happen. This is what is called a bottoming pattern. It's basically you get a double bottom and then you get a series of higher lows. Not necessarily a lower highs, that's the point. If you get series of, not necessarily a higher highs, excuse me. If you get series of higher lows and higher highs at the same time, that's pretty clear. It's like in this instant, that is an uptrend, but the bottoming pattern is characterized by just only series of higher lows, but the highs remained, in the previous direction or whatever they may be. In the bottoming pattern, the important are the lows. So in this point on, I can see that prices are making higher highs, higher lows each time. Excuse me, I'm getting a little bit stepping on my tongue. And we pushed above the EMA. Now this is a good sign. The prices finally pushed above the EMA and EMA is holding. This is the new high right here. First entry long that failed and a second entry long. Now this setup, I had a little bit better setup when I was trading this live, but this is where I took my first trade because this is a second entry long and that's high probability setup. Market moves in twos. That is tied down to human psychology. If something fails, humans will try it and repeat it to do it again. We won't just give up after one failure. So this is why second entries are powerful. EMA is holding and a trend line is holding. And this is what is called key entry point. Key entry points are the safest places for us as retail traders trying to jump on board with the institution's intention, because institutions right now are deciding that they're buying And this key entry point can help us identify where we want to buy. So this was a second entry long, and we made a higher high than this high. So the count starts over. We have a first entry long, pullback, second entry long, nice bullish bar. We are once again confluence, EMA and the trend line. And prices are making higher highs, higher lows. So it is starting to get a little bit more obvious that the uptrend is more prevalent. This is a high probability setup. Two-legged move to the two key entry points. That's very high probability setup. And prices kept working up higher, kept working up higher. This is the higher high of the swing. And once again, you're counting the same thing. You have a first entry long, pullback, and a second entry long. Once again, trend line is holding prices and the EMA is holding prices at the same time. And once again, two-legged pullback and a second entry. So this is how we can get an edge and try to get a piece of what the institutions are doing. We cannot get everything. Only thing we can do is get a slice of the big pie that they're trying to hold. So we just can get these few scalps. Because what I meant that retail traders cannot predict the market, I meant on a bigger picture. We cannot predict where the market is going to be in like weeks time, but we can safely predict where the market is going to be within a few points. This is why we are scalping. We love the scalping because it is the perfect balance between, you know, not being in the market for a long time, because we want to be in the market as you know, as quickly as possible. We want to get out as quickly as possible. We want to be in the market for shorter period of time as we can, because the more time you spend in the market, the more exposure you get and the more risk there is. So we just want to get out very quickly and take our money and run to the bank. So this is why the scalping is good, but also we don't want to have tiny positions, so we don't leave money on the table. Yes, and also we don't pay commissions, because if you just scalp for a few ticks, the commissions will eventually, you know, drag you down. So we have this uptrend working up higher, and you have a first break, and this is a big bearish sentiment that is starting to occur here. A big 3 bars that push below EMA. It may look like a change of trend is happening, reversal is happening, but the bigger trend so far, the entire open, was the uptrend. So the smartest thing to do is just to play this out, because we know there's going to be probably an attempt to make a new high. So even though we have a first entry long, second entry long right here, and it failed, you don't want to take no shorts, because we are still waiting for retest of a new high. And you have a first entry short, pullback, second entry short, big bullish bar, and we are now above the EMA. And this is a nice trap. We tick one tick lower and instantly reverse big bullish bar. This would be a potential entry. There may be a little bit confluence of ideas that we may be waiting for a new low of this downtrend, and at the same time we are waiting for a new high of this uptrend. So this would be a little bit hard to gauge in real time when you're watching the chart. But it's something to think about it, how the way this big bar was bullish and the way we pushed above the EMA, you know that the buyers are starting to come into on the market, and they're probably going to resume this trend. And you know, true to its form, we moved up higher, we made a double top, first entry long, second entry long, failure. But it is a little bit too early to go short yet. You're above the EMA. If we were below the EMA, that has proven to us that the bears are in the market right here, right now. You're still above the EMA, and you would be really picking a top right here. So this is not a smart trade to take, but there is a double top right here. So it depends how aggressive the trader is. And we instantly pushed below EMA, and this is a now complete trend reversal. This uptrend played out with this double top right here. Yeah, this was perfect double top. And now the change in a trend happened. Big, there's even a gap between these bars. So big bearish bars, a lot of people starting to sell. And here's a good idea how to find a trend line. In this instance, you can find a trend line from the top. It is fairly easy. But a lot of times when you don't have such a geometrical tops, this pattern right here is the way how you can find the trend line on the low side, because sometimes market goes up lower like this and will start making patterns like this. So what you can do is you can draw the trend line through these lows, as you can see right here, where the market make one leg down and it's chopping, and you can then carry it to the other side, so you know in advance where the trend line is going to be. Now in this instance, you don't really need it, because it is safe to find it off the tops because this is a nice geometrical fit. But just something to think about, that the other side of the trend channel, the entire trend, you can find it from the opposite side. And once we made this push down, we are working in this uptrend. But once again, you don't want to take shorts in this uptrend because you're right now in the smaller uptrend. We have a tiny little break right here and a new high. But it is starting to look a little bit congestive, a lot of stims. So, and the second entry short occurred, second entry short actually triggered right here below this bearish bar, but you don't want below this bullish bar, but we cannot go short below bullish bar. So you would wait for trigger below this bearish bar, and it didn't happen. It came below here. But like I said, you're getting a little bit congestive, and here you just get a bunch of first entries. You get a first entry short, first entry short, first entry short, and you know this is not a high probability setup. The only safer setup came right here when you have new low right here, first entry short, you have a bullish trap, you make a few ticks higher, and a second entry short right here off the trend line. The trend line got confirmed here, got set up here, and here's definitely confirmed. And you have a break, attempt to make a new high, but the key entry point is in play. Once again, a good scalp. And now the smart trader can make a statement or claim to buy the support right here or buy the failed breakout, and I would actually agree with this. But the fact that we were in such a strong downtrend, I think it is better to be still looking for shorts. But definitely you can see that either way, to buy the support or buy the breakout, would have easily worked for a scalp at this point. So it is definitely not a bad idea. I was just a little bit afraid that the way this market was strong, and the uptrend only got here, we made this double top right here. I was a little bit afraid that we may keep working lower, which we eventually did, but it worked enough for a scalp. And you make a new low, you don't have a first entry because we didn't trigger below one of the lows, because these are matching lows. But on a little bit smaller chart, this is the first entry, and the second entry is one leg, second leg. We are still inside of this trend line, and we're coming back onto support. At support is now holding a double test and double attempt to go high. And once again, EMA is pulling up higher. You have a break, few legs to new high, and prices right now are correcting or possibly reversing. So hopefully it is a little bit more clear that we can follow the institution safely and get a piece of what they're doing. We don't have to know what's going to happen in like 5 hours or whatever. We don't care. We just want to get our money quickly and be out of here as quickly as we can, because the more time you expose to the markets, the more skin in the game you have and the more risk you take. So we just want to get our money, be done with this. And the institutions, they can have the big bag, it's their game. They're the ones who are making all the rules of this, so they're obviously going to make the majority of the money. But it doesn't mean that we cannot make money where the market is rallying up higher or selling off. So I'm going to wrap it up. Enjoy your weekend, traders, and I'm going to see you guys on Monday. Take care, everybody.